Welcome to Trading Lounge and the Asian report for the 23rd of March. Starting with the ASX on the monthly chart here. Well, there's two things I want to talk about here. Is that this whole pattern here that's taken us from the GFC here over to where we are now, it is possible to count this up here as 5 waves here. The problem with this though is that this wave 4 here overlaps wave 1 here. So that would make the move up here corrective. And if that's the case, then we need to look at this here as the A wave down to here, the B wave up to here, and a C wave down to here in 5 waves to make a flat correction or an expanded flat correction. So a flat correction means that the market would move up to its previous high, then move down to its previous low. An expanded flat would take the top out here, which it has done, and then would also take the bottom out here as well, and would also have 5 waves coming down here to take that low out here. So this particular pattern is an A and a B and a C wave here. When I look at other markets, and I'm just using Hong Kong here as an example, we can see that it's difficult from the GFC here to count 5 waves up as 1 and 2 and 3 and 4 and 5 here. It doesn't work because we've got overlapping wave structures here. So in this case we'd label an A wave here, an A and a B and a C for the B wave here, and then a C wave up here. There would also be a case for having wave A sitting over here, but that would make no difference. And in this case here we would be looking at wave 1 here, an A and a B and a C for wave 2. So we're in wave 3 here and wave 4 and wave 5 here. So it takes us it's quite a lot of time to go, I'm saying, because this top here started before the ASX did. So this one here works out quite nicely as an A and a B and a C. So that's, there is a case for that for Hong Kong and for Australia here. Also with the US as well. I mean, the US hasn't finished its top in the right way. It's still got 3 waves up, so we're looking at it being corrective as well. But if the market in the US has finished in 3 waves to the upside, then would have a grand supercycle top in play, and in that case then we would be coming down much lower. And in that case I might just go to the quarterly chart here. I don't really think there's enough data on this particular platform here, and it goes back to 203 here. But in this case, if this is 5 waves up here and the S&P 500 has a top in place, which we're not confirmed just yet because it hasn't finished in the right way, but a grand supercycle would have this here as 5 waves down, probably down close to 4,000 or above that somewhere, and in 5 waves here, and then it would have a reaction here in 3 waves, and then we would see another 5 waves down here as well, and as a 3rd wave, a 4th wave, and a 5th wave here. So that would be a grand supercycle top here, which takes us down. It would also need to go into a logarithmic pricing structure here as well, but also in this case here, and also this could also come down just in 3 waves here and have a B wave back up and then so on down again. But if it is a grand supercycle top, well, then we'd have to look at 5 waves down. So it takes us down much further, obviously. And there's a good environmental sort of case for that at the moment. The SARS, the COVID-19 kicking this off and triggering a whole domino effect of financial weakness in the structure of the financial system. So it's possible. So I'm drawing this out for us, because if we do get 5 waves down to the sort of area through here, then we've either got the A, the B and the C here, and then we work up from that point as a big wave 5 going all the way up here further, or we're going to go in a bigger bear market. So look, the only way we can really handle this in terms of of this is really just to stay with each wave count really. So we know that in one way or another we're looking at 5 waves down here so far. I've got different counts for this 4th and 5th wave, and I've even got different counts for this wave one being here and wave two being here as well on this one. So there's a slight difference here. I've got 5 waves in the 3rd wave. There's different ways to count the 4th wave, and we'll be looking at that today. But it still doesn't matter in the bigger picture. I mean, short-term traders can trade short here because the 5,000th being rejected here, taken out new lows, and will go lower. But yeah, like I mentioned, 5 waves down here, we either get a low in place and that's the end of it, but it's kind of hard to see the end of it really, isn't it, when the COVID-19 virus has really just begun, you know, and to get a correction here, this is where in the funny thing was well, it's not funny, but in the 1929 crash to 32, it was interesting because it was also a real estate situation and a consumer goods situation. I mean, back then you had radios and cars and kitchens and all those consumer goods in a big wave to the upside. So yeah, same sort of thing. But what happened then is that the market went down in 29, and it was the bank's fault. So the government got the banks to shove all the money in at some point, which was at the first low here. They pumped it back up here for a rally like this, and obviously the banks are not pumping any money into this. It's just more of a sovereign situation. But once they run out of money, I mean, the RBA have got, let's just say, $185 billion and they're putting half of that into this situation down here in terms of government bonds into the system for the government to spend in a way. But that's half the money at that point, So they, they'll only have half of their money left at that point. So they can prop it up at this point. But if that fails again, then they won't have the money to put into that. Yes, they can print more, but then that devalues everything else in a way. So, but even saying that too, Australia is one of the safest places on the planet to have money in certain things. So gold and government bonds would be a nice place to park money if we see this situation here work up in 3 waves here. If I can identify this as being corrective, then we know that we've got a shit storm on the way at that point. So I'm not going to panic until this completes here, and then we'll look at this situation coming up through here, and we'll try and figure out if it's impulsive or corrective. But the first move of impulsive, the first understanding of this being corrective, then it's a time to exit any spare property and those sorts of things, because we'll be going down. It'll be a long drawn out situation if we get, if this is corrective here and we're going into a 3rd wave here. That's, the 3rd wave will do the damage, but it's really the 4th and the 5th wave that really drags the economy out over a long period of time, and that's when wars start in those sorts of things as well, at that degree of structure. So, yeah, look, just getting back to this, we know that we're looking at 5 waves down here. I am having difficulty counting the situation in here, and we're going to have a bit of a look at that. But once this lands here, and it may just turn up from here, a bit lower from here, or it may come down here a little bit. Like I said, we will look at this situation here. This is going to be the catalyst for any major decisions as such. So let's just go in and have a look at this here. As I mentioned, there's different ways to count it. However, obviously the situation is short. So we've had it pretty much like this here in terms of look, I'll just keep it simple because yeah, we'll just keep wave 3 on this low here. So this is rallied as wave 4, the same looking wave 4 as this in a way. So we can call wave 4 in here if we wanted to. If that was the case, then we would need to look at this as wave 1 and 2 here and 1 and 2 here, and then down from that point into a third wave here, taking us lower into this space here. Otherwise, we could look at this as an A wave here, an A, B, C here for the B wave, and a C wave here for wave 4, and then a smaller wave down into this space here. So let's just go in a little bit closer. This is another way to, this is the way I just mentioned it then. So with wave 4 here, then having wave 1 here and 2 here, and then down for wave 1, which would leave us on that low here. And in fact, this would actually be here on this, and I'd ignore the spike on this market here because that would leave us with 3 waves up, and then 1 and 2 and 3 and 4 and 5 ending on this one here, and then that would send us an A, B, C for the A wave here, the B wave here, and that needs to go over there for the C wave here, and this would give us wave 3 down here. So as you can see, it would need to sort of work through this structure here. So it's, I mean, I kind of like this one in a way. Yeah, so we'll just see the speed at which this travels here. If this moves really quickly, then we'll sort of know where we are with this, but 3, 4, and 5 here. So we could draw this out. 3, probably something like this here, and then, yeah, and so on at that point. So you can just see that there's more to go here at this stage. Probably bring us down to the 350 sort of area here. So anyway, that's one way of looking at it, this wave 4. The other way to look at this is this way here, which I kind of like as well, which is wave A up here, and then A and a B and a C for the B wave here, and then a C wave here in wave 4 to this point here, then wave 1 and 2 here, and 1 and 2 and 3 and 4 and 5 to the third wave. So not much different from the last one and 4 and 5 here. So either way, this takes us down. I mean, this is basically the markets, you know, it's like the ball bouncing or migrating from being support to resistance over here that comes down to the, you know, to the level, gets a bounce here. The second bounce is lower, so it's losing its momentum to the upside, and then it drops down, which is a weakness, and then it locks up and can't get above that there, and so then we look to short these lows or any lows in any new low in that point there. So being on the short side obviously is the right side, but based on the market price action here, and you know, it's an image here of weakness as such, because it's sitting on this side of the closest largest number. The other way to look at this particular pattern here as well, I mean, of course, these things become clear in hindsight. So the other way to clear this here is looking at this as wave 4 here, and then looking at this as wave 1 here, wave 2 here, wave 3 here, and then an A and a B and a C wave here for wave 4, and then we come down here. Now, and this is the little tricky one here, because in this case here, I can see that if I put, just see if I've got, here we go, we'll just use these here. So we can put wave 1 in here, wave 2 here. So this is one of the things that we just need to keep an eye on here, because it makes it a little bit short at that point. That needs to go in there. We'll look at that. We'll use these here as well. So you've got a clear pattern here. And this is, we just need to monitor and get through this one. So if we're short, this is the nemesis of being short here. So let's just get these in a little bit closer. So that would be 1 in here, 2 in here, 3 in here, 4 in here, and 5 in here for this wave 3 here. Then we need wave 4. So this is really the only bullish one I've got here. So in this case here, we'd look at that top of wave 2 there. Not quite sure if that's finished there just yet because I need to pull that apart. But basically what I'm trying to look at here is how far this would rally back up here as a wave 4. So that's the wave 4 of 1 lesser degree. That's the 38.2% retracement level. So that means that this, if it found a low on this particular number here, then we could look at this. We'll have to adjust this, of course, depending if that's the actual low. We could see a rally here, or some type of rally. And then we would look at wave 5 to the downside here. Wave 5 of 5. So if that's 4 here, we've got 1 and 2 and 3 and 4 and 5 here for the 5th wave here. And what am I looking at in here? Oh, that's the halfway mark. So that should actually be 650 in there. That's where that should be. That's cool. So and once this low comes in, that would give us 5 waves down here. So let's just bring that into, say, 4600 here. That would leave us with back up here again, 50-60% retracement level here. So it may be worthwhile, you know, if the market's moving, if the market, you know, we need to finish this 5 waves off here. So if the market, once this is finished off here, it might be worth locking in a little bit of profit at 4.6 here. And we'll just watch this here and we'll observe it to see if it moves up in an impulse wave or a corrective wave to the upside. It probably won't go that high if it's corrective. It'll just probably retest that 4.8 and then move down from that point. And then we can look to add back into this either on this low here or drawing a line through here. We need to see, you know, this is going to get, looks like it'll probably get a double retest here at this point. Yeah. So anyway, a bit of food for thought on all of that. Alrighty. I'll move on to the other markets. So we're just looking at Hong Kong before in this particular pattern here. So we can just start with this and move in here further. So this has definitely got further downside to occur here. This is, yeah, this is just the beginning. So we've got from the top here, we've got wave 1 here with an A and a B and a C wave for wave 2. So we're looking for the 3rd wave to come down through here. We know that 20,000 or number 2 here is the major level, and obviously there's a good case for support and the market vibrating across this level here for quite some time. So let's just take a look at that. So going from the monthly to the weekly here, we're looking at wave 1 here, an A and a B and a bit of a rough C wave up here, but it works for wave 2. Then we've got wave 1 and 2 here, so we're looking down for wave 3, 4 and 5 here. Yeah, so this wave 3 is our next port of call, so just on the daily chart here. So from where wave 2 is here, wave 1 and 2, wave 1 and 2 here, 1, 2, 3, 4, 5 for the 3rd wave. The 4th wave has pulled back and then pushed it back down again, so that's the 4th wave in here. So we'll see the 5th wave drag down into the 20,000 area through here. And then we'll see this wave 4 here pull back up to the wave 4 of 1 lesser degree. It may not be as big as I've drawn it, but it should be bigger than this simple ABC here on this one here. If this one is simple, then this one should be complex here. And also the support that we've just seen as well. So that also makes a good case for the market sticking to this number here for a while. Okay, let's have a look at India. Okay, this is India on the monthly chart here, and we've been looking at this as from the GFC here as 1 and 2 here, and then 1 and 2 and 1 and 2 and 3 and 4 here, and going up for 5 for the third, the fourth, and the fifth for the third. So we're looking at this as a fourth wave pullback here, but we might have to can that idea because this is wave 2 low here, this is the top here, and we've already moved through the 38.2% retracement level, and we're down into the 61.8% mark here for this. So we may have to consider a top being in place, and my other count for this was, if I copy this here, was having wave 3 here, wave 4 here, and wave 5 sitting on this top here, and having this in place here already. And if that's the case, then we would look at 5 waves coming down through here. Once that's completed, we would look for a corrective move here, and then another 5 waves down at that point. So this is the same as what we're looking with Australia, and this is something we'll also be looking at with the S&P 500 as well. So all of this will just depend on this rally here. If this rally is corrective across global markets, then we know that we're in a grand super cycle top, another couple of degrees up, but yeah, so it will depend on this here. So anyway, let's just cut straight through into the, I don't know if the weekly is going to do much for us. That's not going to do anything, so we'll just go to the daily. So from the top here, we've been counting down as 1 and 2 here, and then down for the third wave, a fourth wave, and a fifth wave coming down into this space here. And I've just got this as the A wave, but don't pay too much attention to that or that. But this 5 waves here, once finished, will produce some type of correction, and then we'll look for further downside. So on the 4-hour chart here, we've been looking down at 1 and 2 here, then 1 and 2 and 3 and 4 and 5 for the third wave here, the fourth wave here, and looking at this here, much the same as the S&P 500 and the other markets around the world. They're all doing slightly different things, but in this case here, we can look at from the top here as wave 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 for the third wave here. The fourth wave rallied a little bit higher than I expected, just touching in on wave 1 here. So we need to, well, just move these here, but we still haven't finished this move down. We know that wave 4s can get complicated, but it won't reach any higher than it actually is now. Well, it shouldn't do because it's already overlapped the wave 1 here, which which breaks the Elliott rule as such. But we should still, if this is corrective here, we should still see the fifth wave to come down through here just below 8,000, and then we'll start to see the rally in this case move up from that point there. So on the 1-hour chart here, this is how we've had it. So we've been stopped out here. I did all the right things, just unfortunately that's the way the cookie crumbles, and like I mentioned, this is really overlap with the low of wave 1 here. But we use this as the third wave here. I just want to have a look at this here for a second. I mean, yes, I mean, that's a 61.8% retracement level there. I mean, the other thing that we probably need to be careful about here is that I've got this as 1 and 2 here and 3 and 4 here, but it has pulled up quite high. We'll look for the fifth wave, but it could also be down for 1, back for 2, down for 1, back for 2, pulling back to the 61.8% retracement, and then going down for 3, 4, and 5. So a much deeper thing there. So what we might do here, if I've got, I have to grab one of these. I don't think it's the case, but it certainly could be. And we just need to be aware of it. You know, we don't want to get caught off guard. You know, we need to look at these things. I'll put it over to this side and over to this side. We'll just see the speed of which this comes in, and I'll just dull this out a little bit as well, just as an alternative count, you know, which can't be ruled out. That's the problem, you know. So we just need to look at this a little bit further. But yeah, so well, we don't need these anymore. You can go short, but I won't go short here with you because wave 5, let's just say that wave 3 here is longer than wave 1 here. So wave 3 has got a better form to it all. So we could look at wave, roughly, wave 1 here, and wave 5 being roughly the same here. So that could take us down, and probably even be shorter, to be honest, but we'll just see. And this will help. This will also help us understand what is also happening as well at this point. But before I could call this wave 2 here, we would need to see 5 waves down, which next time we'll have a look at the tick chart and the 15-minute chart, and we'll have, once this completes down here, we'll see if we get what we get here, you know, see if we get 5 waves. I know, I guess we've got 1 and 2 here. I'll pull this apart later, but expect to bounce off here. You know, it's going to be a bit rough here with all of this, but yeah. Alrighty, that's it. Thanks for tuning in, and thanks for your support, and take care with this virus thing. Alrighty, cheers.
Report unless it's done.
Really?
Just sorting up some plates.